Hey, what's going on, guys? It's Edward with Crypto University. In this video, I'm going to be talking to you about the risk to reward tool that TradingView has to offer and how you can use it to set up a long and a short position. So I'm going to be showing you a couple examples of how you can take a long and a short. There's not going to be much technical analysis behind it. I'm just going to show you how to use the tool. That way you can actually input it into your exchanges. I'm going to be showing you with Bybit, so that way you can see how to make use of it and then actually transfer that information into your exchange and make the trade. So let's go ahead and take a look at this chart here. I've got Cardano pulled up, and this is going to be on the 1 hour time frame we're looking at. And again, I'm just going to be doing a quick analysis on this so we can see how to use the tool. So we can see that we've broken out of an uptrend wedge from over here. Now we have a valid downtrend, and we have another wedge formed here. So the tool where you can find it is right here on the side. So if you click, you'll see the long, short. Those are the first two. Most people usually only have spot exchanges, so we're going to talk about the long tool first, how we can take a long position, and then I'll talk about how we can take a short position. So let's just go ahead and zoom in here, and we'll draw into our wedge. So this is what our market structure looks like right now. I'm going to go ahead and try to use our long tool right here, and I'm just going to go ahead and say we're going in at market price. Now there is a difference between taking a market order versus taking a limit order. I'll explain both of those in this video. So if we're going in at market price right now in a long, that means we're going to set up buy low and we're trying to sell high. So we want to buy low, and then whenever the price reaches the top of our green area here, this is where we would take profits. Whenever price reaches the bottom of this red area here, this is where our stop loss would be triggered and where we would be closing the trade for a calculated loss, right? So let's take a look here and adjust it to see if price breaks below this line, because it's been respected a few times. If price breaks below this line, I want to set my stop loss right there. So that's minus 3.38%. So right now this is better than 1-to-1. As you can see, I'm risking a 4% gain for a 3% loss. So this is not a bad trade. If I'm jumping in at market price right now, I'm not sure what's going to happen, but one way or another, price is going to go in one of these directions, and either way I'm going to get filled. So this is how I can calculate my long position, and I can see, okay, well, if I think maybe I can raise it up, looking at these previous high levels here, if it does break out, I think maybe it could go to this price right here, or maybe even this price here, right? If I'm looking over here at other highs or previous price action levels, I can judge where I want to put my long on the map or on the chart. So that's how you would set up a long position if you're going in at the market price. Now let's just say, for example, you're trying to chart a limit order entry. So you actually want to wait for some kind of pullback, right? So you're expecting the candlesticks to come back into this number somewhere right here, and then you want to get an entry right here. So as you can see, that'll change your risk to reward ratio. See, from simply going from entering right now to changing my entry, right, keeping both of these the same, you see how the ratio changes. So if you waited too long to enter, this might not make sense in the long run. Actually, let me set that back up to where I actually want to trade. So if I'm trading this outbreak here, I'd like to try to at least go 1-to-1. So this looks like a reasonable trade if I'm entering right now at market price. Now if I want to set up the limit order, again, I'll try to set it right here along this line, right? If I think price can honestly come back here, if that's my wager and that's my prediction, I'm thinking this downtrend is going to come even to right here, right? So then I'll set my entry at 2382, right? And then we have a stop loss of 2342 and a take profit of 2512. So now let's take a look at how to set this up in your exchange. I'm going to go over to Bybit, and I'm not really going to show you too much about how to use the exchange here. Basically, it's the same across other exchanges. We've got other videos for that to show you how to use your different exchanges. Basically, right now I'm just going to input the order price, and I'm going to use a take profit and stop loss to show you how you would actually transfer this information into your exchange. So if you want to take a long position now, you can go ahead and put right here your entry or your limit order amount would be 2.382. So your order price right here is 2.382, and however much you want to buy, that's whatever you would put right here in your quantity. So if you want to go long, then we're going to set our take profit and stop loss based off of these parameters in our chart. So take profit is 2.512, and then our stop loss is 2.342. All right, and then you just put how much, like I said, how much you want to buy, and then you can go ahead and open your long. That's on Bybit. And let's just say for example purposes, you did want to just go ahead and go in at market price. So let's set that up there. We can see it's just about 1-to-1. So nothing really changes as far as our inputs go here, except now instead of using a limit order where we're trying to get in at this price, we're just going to go ahead and press market and then put our values in again. So I think it was 2512 and 2342. So there you go. That's how you take a market entry using your risk to reward ratio tool, projecting along. Now let's take a look at the same setup real quick, or this same market structure, and try to project a short just for example purposes. Now like I said, none of this is accurate. By the time you see this opportunity will be gone. I'm not trying to make a deep analysis for this trade. I'm just trying to show you how to use the tool. So now let's just go ahead and extend this out over how long we think we might be entered. So now you can see the red is on top, the green's on the bottom, right? Well, why is this? It's because this is a short trajectory, which means you want to sell high and rebuy low. So if you're going to be selling this asset right now, that means you're trying to rebuy it when it becomes cheaper, right? Because if you think price is in a valid downtrend, then you might want to avoid some loss and then try to rebuy your asset for a lower price. Then you could pocket the difference or even rebuy more of the asset. So that's how you would try to take a short. So if you want to set up your short target to something like this would be reasonable. Well, your stop loss is actually out of bounds at that point. So maybe here you'd want to put it over this yellow bar, right? So you think, okay, well, if price falls through this yellow bar, it's probably going to be a bullish outbreak. And at that point, I'll want to rebuy my coins. So that way I don't miss out on that later upwards price action. Or if you're on futures and you're shorting it, of course, you don't want to be engaged in a futures contract that's becoming a loss, or you might get liquidated. If you're using cross or isolated, you can liquidate more than you need to. So using a stop loss is a great way to avoid losing funds in a short scenario. So it's almost the same thing as setting up a long, except the opposite direction, right? There's only two ways to gamble in the market. You're either going to gamble on a long or gamble on a short, right? And if you're wrong, or if you lose, that means you made the wrong choice. You should have bet on the other direction. So you can look back at that and see. But this is how you would measure. So now let's go ahead and look at our short. Here we have 2.472. So we're going to sell short now. And our take profit target is going to be the opposite direction now, right? Because we're expecting price to continue down if we're planning a short. That's what short means. So then we're going to be looking at 2.354 for our take profit target, and our stop loss would be 2.472. Okay, so that's how you would set up a market order for it. Now you can go to open short if that's what you wanted to do. And again, might be a little bit different on different exchanges, but this is just a general how-to. And of course, all these tools should be in your exchanges. I mean, if you open up some of this stuff here, there we go. You can see that the long short position tool is also on your exchange. Some exchanges do offer them, but they're just not as easier to use, or they might get lost, or for whatever reason, a lot of people choose to use TradingView, like myself. So you can definitely set this tool up within your own chart, so you don't ever have to leave, your viewing, and you can set it all up here. Obviously, you can see the values are input just as they were on my other screen. So if I wanted to take a short on this now, let me go ahead and get this out of the way, and I'll show you another example. So if I wanted to take a short here, this would be a 1-to-1. I could try to at least get back to the 200 moving average. That would be a nice profit region right there. And then maybe I can even extend it to some of these levels here. But if I want to just take this short scalp, then I can set my short right here. All the numbers are on my screen for me. So then my take profit is 2.4087, and my stop loss is 2.4391. So then if I wanted to do that, I could just open my short, and that's how I could do it at market. Or I could do a limit and say, okay, if I want to move this down, then I could say, all right, I'll enter here, keep my stop loss about the same, and now I'll target to here instead. So now I could set my limit order, right? My order price would be right here, 2.4225. It's provided by this tool, 2.4225. So then I would just type that right here, and I would have my order price put in for a limit, and then again my take profit. Now I have 2.3947, and my stop loss 2.4342. So there you go. Then you can open your short just like that. So that's how you can make use of the tool. I mean, it is on your exchange. It might be on your exchange depending upon what exchange you use. Not all of them have the same charting software available, so it does help to have TradingView. There's a lot of other tools available on TradingView. All of those charts that are on most of those exchanges are powered by TradingView. Let me go back so I can just show you. I don't have my 3 commas open to show you right now, but here you can see this chart is powered by TradingView. It says right here. So TradingView is the man with the plan. You should take it upon yourself to get familiar with how to use these tools. That way you can, leave these up in some of your charting. So let me just go example and show you something like, I know that I took a swing trade on theta, and I can go on to that on my Binance chart and look at that pretty much, anytime, and backtrack and see, okay, where I was on that. So, it's actually quite a profitable entry point. This was the first rally I made off of it, so obviously that's a huge profit range, 44%. I was able to keep up with this because I made use of a lot of different tools that TradingView has to offer. So I was able to, chart this range here and see, okay, we're going against an outbreak. So I set up this long short tool here, and then I even can start to use this as sort of a grid for entries, right? So you can see here, these entries are profitable, and you can find a place to take profit, here, if you even shorted in the opposite direction, you can find a place to take profits. So you can definitely find lots of different ways to make use of the tool and use it to improve your trading projections. So thanks for watching that video. I hope it helped you understand the risk to reward ratio tool a little bit better. That way you can use it in your trading strategies and help you project more profitable trades.